Nice. Hi everyone. Hope you guys are doing incredible. It's been a long time coming. It's been a long time coming. And hope you guys have been doing incredibly well. So in this session, it's very simple. Today we're gonna talk about three things, really important three things. First, we're gonna talk about what happened to the economy right now. Do we think things are gonna go up from here, or do we think things is gonna come down from here? That's the first thing we're gonna talk about. The second thing um we're also going to talk about what? We're also going to talk about um we're also going to talk about what's happening right now. How can we, as the traders right now, what is the best thing to do right now with this crazy economy doing at the moment? And third, we're going to go through some of your trades as well. So that's what we're going to do today. Really powerful. Now let's get straight into it right now. So I'm going to share my screen. So we've got Muhammad, welcome. We have Sarah, we have Laura, hi. We have Sam, we have Bebe saying hi. We have Asen, we have Gary, we have Thomas, long time Thomas. I saw you the other day. Really good to see you with Melissa and Javier, Shamin, Rani, Sania, Mario, and Stan. Well done. Now, what I'm gonna do right now, we are gonna start sharing my screen. Today is gonna try to be short and simple, even though it's really critical moment at the moment. But let's have a look. So whenever we start anything, we really want to start with SP 500, because that is the mother, father, and sister of all stocks. Chances are, okay, yep. So as I said before, a lot of people are panicking right now, are really scared right now. But as I said, we have 2000, what's that called? Internet bubble here. We have financial crisis here. We've got 19987. We have like World War One, World War Two. We have a lot of things going on. And tariff crisis, we got hockey, like some tariff crisis in 1934, 1932s as well. Crazy crisis going on. Um, Stock was going sideways for a long time. Eventually, deep down before it start going to the way that it want, unless we start reversing all of the tariffs and stuff like that. That's 100 years ago, and almost. And so I'm gonna tell you right now, a lot of people are very scared. Oh, my portfolio is a lot of people are green. That's how if you've been trading for a long time, maybe you are a little bit red or a little bit down, some correction going on. And I'm gonna say congratulations because it's very normal. So if your portfolio that you are looking at right now is down, I would say congratulations is very good. That means you're actually invested, and you're not the only person that is down. Anyone in the world right now, Jeff Bezos, Elon Musk, Mark Zuckerberg, anyone that you know right now that you know is also down as well. So if you think you are alone, if you think you're super scared, I'm going to tell you right now, do not be scared. You are not alone. If you are scared, just let me know. Especially if you're using share dealing and investing platform, literally nothing to be scared. Literally, there's nothing to be scared if you're using this type of platform. Unless you're using some like CFD and spread betting platform, then you might want to shake you be a little bit shaky a little bit. Write that down. You can only use spread betting and CFD platform if you really want to buy when the PE ratio go out of proportion. Repeat, when the PE ratio goes out of proportion, when the PE ratio are super low, historical low, then maybe you can use some leverage. We talk more about it in the high level training. Use some leverage. You can use eToro 2x, 3x. You can go on investing. You can go trading 212. You can do ISA account. They have X3, X2, some leverage on some certain stocks, whether it's on SP 500, whether it's on Tesla, Nvidia, and all of that. They have X2, X3, and you only use that. We will talk more about that when we come close to that situation. We are not there yet. The PE ratio right now is actually just in the middle. We're gonna go into that later on. When the PE ratio is super low, then you can use some derivatives. You can use some leverage when the odds are in your favor big time. There's just no way you're gonna lose. Then you can use some leverage. Otherwise, you have to use a stop loss. Otherwise, you have to be very careful. Otherwise, you know, and things like that. And a lot of people are trying to make money every single minute. A lot of people are trying to make money every single hour. As I said before, I want to say it again. In trading and investing, if you try to make money every single minute, you're doing it wrong. If you're trying to make money every single 1 hour, you're doing it wrong. Trading and investing is this. It's about getting rich one time or two times and you call it a day. This is it. In your entire lifetime, you just need to get rich one to two times and you build it up from there, and this is it. Warren Buffett just made more of his most of his wealth by buying five stocks. Literally buy five stocks. He got it, he get it, he run. He didn't buy thousands of stocks. He didn't try and day trade up, you know, buy, sell, buy, sell, buy, sell every single minute. That's not how the successful people really make it happen. When you can do it, doesn't mean you should do it. I repeat, when you can use leverage to do 1 minute kind of trading like that, every minute you go up and down, up and down. We will teach you in the training later on. If you're on higher level training, we'll definitely sit down and teach you how to do that in the proper way. Yes, in the proper way, in the odds that is in your favor, you use proper stop loss. Then absolutely, yeah, write it down. If you're using leverage, you definitely have to use stop loss. So up down up down, when you can do it, like it's the house, you definitely can flip the house, like buy the house in 1 minute, sell the house in another minute, buy the house in 1 hour, sell the house in 2 hours. Yes, you can do it, but that doesn't mean you should do it. Yeah. So trading and investing get a bad rap just because of a lot of people they didn't do it the right way. They don't have a proper mentorship. So I'm so excited for you, for a lot of people who decided to invest in yourself, who invest in your education, because this is it. This is how you because you can see no matter what happened to the economy, stocks always go higher and higher and higher. This is financial crisis. It go higher and higher and higher. This is corona. This is inflation. Now we have a tariff crisis kind of going on. I still don't think this is big enough, but let's have a look. So let's get started right now. So a lot of people say, "Oh, when is the best time to buy and stuff like that?" Now, in as I said, if you buy right at the top, I want to say congratulations. Financial crisis, you buy right at the top, you're fine. Inflation crisis, you buy right at the top, you're absolutely fine. Any crisis that you bought right at the top, you are absolutely fine. Yeah, because eventually you're gonna make money because trading and investing is actually so easy, and most people lose money because they go on to do forex. That's the tricky part because forex will never be that. The forex is always up, down, up, down, up, down, up, down, up, down, up, down, up, down. So you can never buy at the top and you call it a day. No, it goes up, down, up, down, up, down, up, down. Yeah. Anyway, so but stocks are very reliable and very consistent. So congratulations for those who are serious about getting good at this. So, s- um, so yeah, so you can see we got the crash kind of going on last week. Where were we? Um, yeah, we got a kind of a really nice kind of crash going on last week. A very fast. This is one of the fastest jump, fastest crash we ever seen. They crashed around 10%, just like that. Today is how much now? Today 6-1 to 5-4. 6-1 minus 5-4 is 7. 7 divided by 6-1. It's around 11% drop. Last time we've got 6-1 minus 4-8. 6-1 minus 4-8. 6-1 minus 4-8. 6-1 minus 4-8. How much is that? 6-1 minus 4-8. That's 3. 6-1 minus 4. You can see maths is not important here. Even I can't do maths. We are still calculating. I think it's 13. 13 divided by 6-1. 13 divided by 6-1 is just 20%. We have a 20% crash last week. And then now we have a 11% crash. Kind of, something like that. I'm just gonna write down here. Tax. So what is that? That's 21%. 21% crash. And then now, with what we've got right now is 11%, roughly there. Okay? It's around 11%. Buying now will be the same price as people who bought it in June last year. Bought it at the bottom will be the people who bought it in February last year. One is 6 months of discount, roughly. One is 1 year of discount. Yeah? So let's have a look right now to see what's happening. So we're going to do the normal technical analysis right now very quickly when we first started. So this is the support line you can see at the top here on the weekly chart. it bounces our support line, showing a really nice 21% crash, same place as 2022, and then it bounced back up a little bit just right there. Okay, it bounced back up a little bit. Remember, stock market doesn't move in a straight line. It moves up and down, up and down, up and down. So whether you are winning, don't think you're gonna win the straight line. Whether you are losing, don't think you're losing in the straight line. Yeah. Whether going up, don't think it's gonna go up in the straight line. Going down, it doesn't go down in the straight line. It's always go up and down a little bit. So third step, I draw a support line just right here. The second support line would just be just probably just around here. 21% crash. If it comes to 46, 15 divided by 61 would just be 25% crash if it comes down to this point. And if it comes down to this one, there will be a really nice 43, 61, probably 18, 19, 19 divided by 61. So 30% crash. That would be really nice if we can see a 30% crash. That would be a really, really good to get in. And if it gets to around 440, 43, yep, that's a 13%, that's a 30% crash. I'm just write down here. So you know the percentage. This is a 30% crash. What PE is this? This will be the PE of 43. We'll do the PE later. Okay, we'll do a PE later. But anyway, so there we go. If it comes down to 30%, that is actually almost quite of a jackpot. Yeah. That's actually very, very nice. It will be a time where it's like 5 years worth, 4 to 5 years worth of discount. Yeah, if we have a 30% crash. As you said, we don't have to aim and time the market like that, but I'm just showing you. There's a 11% we are right now, all the way to top. 21% if it's come back to where we were. And this is 25%, and 30% is just in 440, just right there. A 30% crash. Crash back to, yeah, more about 1 year of profits or 2 years of profits, which is pretty fair. Okay, not too bad. Anyway, let's do our technical analysis right now based on the week 2 training. So first step, we were trying to draw a trend line. We draw an uptrend for those who are new. The training starts now. Just now is just some psychology to keep your discipline a little bit. You draw a really nice uptrend just right here, saying that potentially it might come all the way down there, potentially on the weekly chart. And then you draw a support line. Support line is anything at the bottom here, bottom here, bottom. The resistance would just be here. I really don't think we're gonna get there. If it gets there, it has to come down. Yeah, if it comes all the way up, it has to come down eventually. So that is where we were right now. And step number 4 is just some chart pattern this time. Step number 5 is indicator. Let's look at what indicators is doing right now. Let's do this and the CCI. So this is a buy signal. We haven't crosses that up yet. Okay. Mm. And this is a buy signal just right here. It's a buy signal just right here. We have got a little bit of buy signal kind of going on in stochastic. So technical analysis kind of says buy using 10% of what we learned so far. Yeah, that's what technical analysis is saying. Now let's look at some other strategies right now, which can be even more important. Let's have a look. This is important bit. Let's see. Oops, where am I? So we've got, let's click on that and let's click on that. Let's click on that as well. Few of this. Cool. So, what do we have? So last time we've reached here. This is in What day? Let's see. This is very extreme. This is like the fear and greed reaches 4 last time. When it reaches 4, things go up, fake out a little bit, and then come down one more time. Let me show you. What day is that? The last time we reaches 4 is around May time. So what happened here is that the market reaches 4, the fear greed. Can you see just there? Fear. And then it went up. And then it went up. People thinking that it's going to go up big time, which is fine. Even you buy here, you are very, very fine. I'm going to tell you right now, even you bought here, very fine. But what this is what the market does. The market went down even lower, 5 to 10% lower, forming another extreme fear. So even you bought here, you're very good. And then you pretend to go up big time until in October time, there's a really nice rally going on when the fear reaches here, and we have a bottom just right there. So it went one lower, two lower. I think these two are very similar. So it went around. So this could be the low, but it can go even lower. So this is where we are right now. So here it went up. Here it just went up straight away. And here, this is extreme fear. Anything below here, for those who are new, is a kind of fear stage. It went up. And right now we are here. Very similar to where we were. Let's me look at the number. The number is 4. Okay, so this could be a bottom from what they say here. But you also can do what you used to do. You can go up there and then come back down, forming a next bottom, going up. From the last third 3 bottom going on before you start going up nicely. Then this will be perfect situation. This is the first situation that might happen. Okay, very similar to last time. Extreme fear number reaches 4 and then come back two more bottom before you start going up. That's the first case that might happen. The second thing that might happen is it might straight away bottom here and then maybe come back a little bit just right there and then just like that. That's a second situation that might happen. Yeah. I don't think so. The second might happen, but it might happen like that. But the first situation is like that. Okay. This is it. The first or second. Now, let me continue. So we're seeing extreme fear now. So is it okay to buy now or things like that? Let's have a look. So buying here a little bit, having 1%, 5% of your portfolio is fine. I did do some 5% of my portfolio a little bit, 5 to 10%. And a lot more portfolio is gonna go in when it crashes 20% back to where we were before, which is just here. You definitely want to get a little bit more in. If you miss out that, if you miss out this bottom, you definitely want to get a little bit in. And I think if it really comes back, visit this, it might come all the way down a little bit more. Then you want to add a little bit more in there. All right. So that's kind of what happened. And you can really use leverage when we'll tell you more about it in our one-to-one kind of later on. Don't want to say it now, otherwise it's gonna get really tricky. Now I want to talk in a way where everyone is like a beginners, everyone is new and stuff like that. We'll talk more some advanced stuff in our one-to-one kind of later on, how to speed up and stuff. Anyway, so but the conclusion is when the P is super low, then is where you can use some leverage. So put and call ratio will come back here. Okay. Um Extreme fear. So the rest is quite fine. We are still waiting for the magic crossover for open insider. We really want the CEO to start going in to buy. Some people say this is a crossover. Potentially, there's some crossover here on the 10th of April. Potentially, 10th of April. The purchase is 58, sales is 61. That's okay. It's not perfect. But to be really crossing over, you want the purchase to be more than the sales. Okay? Purchase to be more than the sales. So that 10th of April, some people get on it, some people get excited. Let's see 10th of April, what happened? Yeah, 10th of April is kind of like that one. That's okay, but it's not the best. We really want the purchase to be more than anything else. What's this? Yeah, so we're waiting for the crossover just right there. Now, um, fear and greed, you want to come back to the fear stage, like below 10. We talked about below 9 the other day. Here is at the bottom. Let me show you what happened when we're at the bottom every single time. When this is at the bottom, last time we're out here, we have a bottom just in June and September. We went up. And then there's another bottom here. We went up. Wow. There's another bottom here. We went up. It will be nice to see even more. So I'm going to try to choose even more. NAAIM historical data. I'm gonna go for 10 years, 5 years. So where are we? So there's no stock. You can't really see a stock, but you here, here. You saw that just now. The stock keep going up. Even here, January, the stock keep going up. This is what 31st of May stock go up. August definitely went up. Let me see the last time we were here again. 21st of September. The stock did went up on 21st of September. Here, 15th of December, the stock did went up though. 19th of Jan, the stock didn't. So this is the time where we didn't really have to go up there. So let me just draw in a thick way so you can see it. So here. So went up, stock went up, stock went up, stock went up, stock went up. And then one time the stock didn't go up and it just went down here. So the stock went up, the stock went up, the stock went up, the stock went up. So we're just waiting for the one time where it comes back to around this level. There'll be a really, really good time to buy. Okay. Now that's step one of our week two training. Let's go to step two just real quick. In terms of season, in terms of rhythm, historical pattern, you see that we got the February here, went down all the way down. So a lot of students made a lot of money just right there. When you make a lot of money, as I say, if you're using leverage, you make a lot of money. You want to take a lot of your money to put in your ISA account, take a lot of money to put in some other account. Don't compound your leverage money, get bigger and bigger. Write it down. Never compound your leverage money. If you're using CFD, if you're using spread betting, you never compound it, make it bigger and bigger. Oh, I already make 100K on my leverage account. Let me just use all of that into my leverage account. You never do that. The maximum that you should have on your leverage account, unless you have some one-to-one, is around just 5K to 10K. Unless you've got some one-to-one, unless you have done some one-to-one. Make sense? Otherwise, you're just supposed to do 5K to 10K. Otherwise, you might give back all your leverage account. We say that things are getting rich one time. It's true because you get it rich one time, you put it into the right non-leverage account and you compound like that. Guarantee wins like that on the share dealing account, not the leverage account. Okay? You cannot say guarantee win on a leverage account. Never. You can only use the word guarantee win on a non-leverage account. Very safe, very powerful platform. And the training will tell you more if you want to use leverage. This you can definitely can. And in the training, in the one-to-one, if you're in a higher level training, we sit down together really to talk about that in detail. Anyway, coming back now, what I'm going to do right now, I am going to yeah. So we're in April right now. April, the first week of April is always very nice, very dandy, very perfect. We're on 15th of April right now. This is where nightmare is supposed to happen for some people who don't know how to trade. Because normally on 15, sometimes what is the blue one? The blue one is sometimes it might come down. The yellow one, it might go sideways. The orange one, it might go sideways a little bit. So 15th of February is where things start. Last week, everything should be just like okay, a little bit, like okay, like that. Yeah, that's where things start. And then mid May is really when we start. Okay. So what was I saying? That's the first part. Okay. Now, so you want to get ready, you want to learn, you want to do your one-to-one right now because when we come to Mid-May, that's when we really do a lot of things. You're gonna set up the right trade, set up your leverage trade, set up what's your not leverage trade, set up your pension. Who here has a pension? I just don't want to talk about pension real quick. We have a module on our pension, our high level training, but I want to talk about pension right now. Everyone here should have a pension. Whether as long as you work in a job, you should have a pension. Like there's no way you're not gonna have a pension. And and most people lose money on their pension. If I'm gonna do calculation for you, most people do lose money on their pension. If I do some calculation, just in a real quick way, let's say a month you give £100 on your pension. Let's say 12 months, you give £1,200. Let's just make it easier. Even you don't give, your employers is gonna give. It's legal. It's like compulsory, I think. You do have to do a pension. Let's say you work for, I don't know, 10 years, 20 years, most people here do. You at least you would have your 20 years times 1,200. How much is that? At least you should have around 40 to 80K on your pension, just like that. Most of your pension company just sit there and they do nothing. They either give you negative 3% return or they give you 2% return. So at the end of the day, however much you put, you would just be like that, 40 to 80K. You already know the inflation is around 20%. Look at the meal deal. £3 meal deal now become £4. Some people become £5. 20%. So you are actually losing however much a pension is. Let's make it easier. 100K if you work for 30 years, 40 years, 50 years, whatever that is. 20% 100K, you already lose how much? 20%, 20K a year just on your pension. 20K a year, how much is that? 20K a year, a month is what? Tax free, a month is what? 1.5 times 12. Oh my God, how do I calculate this? 20 divided by 12, 1,600. You're already losing 1,600 a month by not touching your pension. And 1,600 a month, you will lose 80 quid, just by not touching your pension. So this is when you are using pension, when you are being managed by your pension company, the pension company. So what you can do in the UK, you can do something. We can change it. Other countries, you can do the same thing. On US, you can change it to 401k. You call IROTH, IROTH. You can do it yourself. And in this country, you also have called self-invested pension, called self invested pension. You basically, rather than them buying bonds, them buying, like, I don't know, buying some not good stuff, tobacco, they're buying like some stuff, it's not gonna do well, some toy stuff, some like BlackBerry and some stuff that you never know what happened. Normally they will invest in the whole world. Okay. So rather than that investing in random companies like that and giving you no return and stuff like that. And this is where you want to make in the training, on the higher level training, we really guide you step by step what to buy, what to sell. Most people doing it the wrong way. They don't use the right currency and stuff like that. They say why my return is so low and stuff like that. So really important. If you do self-investing in your pension, if you do it yourself, very, very minimally, you should have at least 20,000. So you should have made a lot more money. A lot of students achieve early retirement just like that. Yeah, that means you call out your pension and say, "Hey, can I change to SIP, please?" And then once you've done that, then you get to choose what you want to buy and sell. So you get to choose the stocks that you want to buy and sell. You can choose any stocks that you want. But in the training, when you want to do it, we're gonna book a one-to-one. We're gonna sit down together with you to build that out. Yeah, send me a text, book a call, so we can do that for you. Okay, that's for students on the apprenticeship training if you get accepted. Anyway, let's come back to this as well. So that's kind of what happened. A lot of our students made a lot of money from that, which I'm very, very happy that they did. Now, let's come back to this right now. Otherwise, you're going to be losing money without you realizing it. Even though you think you're not spending, but you're actually spending in a way you never realize. So that's based on what season is. But at the end of the day, last week I said one of the most powerful stuff is to know the true value of your stock, the true value of your company. So let's look at what's the true value. Historical PE ratio of SP 500 right now. Are we good right now? Are we cheap right now? Is it time to go in right now? And stuff like that. Let's have a look right now. Now, Raven, there's so many websites. Which one should I look at? Well, open all of them. Yeah, open all of them. You will be absolutely fine. Cool. Let's have a look right now. We are at here at the moment. We are at 25 at the moment. Let's look at historically when we're at 25, what happened to the stock? All right. Let's have a look. So 25 is here, pretend. So last time we were at 25, we were at here. This is 2020, 24 January. The stock went up big time when we were at 25. What about here? 2020, 23 July, stock also kind of go up big time. What about here? 2020, 21, that's when stock market crash. 2020, 24, stock up went up big time. This is market crash. 2018, the crash a little bit. So most of the time, the market did crash just around 24, 25. Okay, when we are there. So, when did the markets really stop crashing? As I said before, I want to say it again. 25 is okay. It's not the cheapest, but it's okay. What is really good is this bottom just right here, which is when the PE becomes 20. Okay? When the PE becomes 20. Even here, if you don't try to be so now you can really use a lot of leverage when it comes to really low PE just right here. You know, as you can use some leverage, you can, um, and stuff like that. But when we are in the middle, you just want to kind of dollar cost averaging just right here and dollar cost averaging just right here as well. Okay. So in the training, we're gonna in a one-to-one, we're gonna build up exactly what price, exactly what point. We can set it up exactly what stock, when to buy, how much return, etc. Really, really powerful stuff. Now, so right now we are here at the moment. Let's look carefully. Where are we? How can we see where are we? So we are kind of in the middle. I think this is a standard deviation and stuff like that. We are kind of in the middle, just right there. If I choose all, yep. So we're in the middle, just right here. It might go, sideways a little bit, but to really, really want to buy, it will just be in. At least we could get to around 22.6, just right there. Now it's around 25. Mm. Cool, 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 cool. Not bad. So it's still a little bit more. So there's no need to worry. This is the good news about trading and investing. You don't have to chase it. You wait for the right price, you wait for it to come back to the place that you want, and you make a lot of money like that. Yeah? Cool. So that's kind of what happened. So if people ask me how do you make money right now, the best thing to do right now is actually to set pending orders at the right PE ratio. In our one-to-one, we're gonna sit down together to set up in the right way, whether you use leverage, whether we don't use leverage, it depends on the stocks and stuff like that. So you can build it up big like that. Yeah. Don't miss out on this. A lot of people are sitting down and missing out on this. You can miss out on this, that's fine. Absolutely fine. But if you have the means, book a call, and we're gonna sit down to do it properly. Yeah, really, really powerful stuff just right there. Cool. Now, what I'm gonna do right now, I'm gonna go to your homework right now. So what's the conclusion of the stock right now? The conclusion of the stock right now is I would just say stock doesn't go up really nicely like that. Let me just give you some emotion. Stock went up. Okay, okay, let's have a look. Let me give you some emotion just a little bit so you can relate. So a lot of people they will be like, before it crashes, we have a trend line, really nice. People who do technical analysis, they'll be like, oh, it's gonna bounce off this trend line on a daily, but it doesn't bounce, and then it came back down. You'll be like, oh, 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 it's gonna come back down, it's gonna come back down. I showed you the chart, the emotion chart the other day. They were getting really, really scared. They were really scared. Oh, finally, come back up now. Come back up for 5 days. Come back up for 3 days, 7 days, and they'll be like, "Oh, finally, finally, it's gonna go up higher and higher and higher." And then it's a fake bounce. It literally just continue to come even down even more, and then higher, higher. It might go up. It might go up right now. It might go up right now. So that's what happened. Okay. And or the second situation is people who short. People who short, they think, oh, I'm really, really good. I'm really, 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 really good. Oh, it's pull back, pull back. Oh, let me get out, get out, get out, get out, get out. Oh, it might come down again, might come down, pull back, come down again. They're basically thinking that life is a rocket. Life is not a rocket. Life is a up and down, up and down, up and down, up and down like that. Yeah. So just want to make that really, really clear right now. So there's no need to be like that minute per minute. Yeah, in the training we'll teach you if you want to do minute per minute, we'll teach you exactly how to do it in the proper way. But at this moment in time, there's literally no need to do minute per minute. And if you see red right now on your share dealing platform, as I said before, and it's very, very normal, I want to say congratulations because you're willing to put something in, so that you memorize it, so you understand it, because you will see this like three times, two times, and you get a hang of it. I've seen this so many times, you kind of can predict, you kind of can feel it, what's gonna happen. Yeah. So that's what happened right now. No one is actually buying stocks right now at this moment in time. Warren Buffett is not buying stock right now. Even JP Morgan, Jamie Dimon just yesterday just sold some stocks. So let's look at how happened to JP Morgan stock. Yeah, a bit down, like 5%, like 0.5% down, a little bit just down right there. His stock is a bit overvalued. You can see just right there. So maybe it's gonna come even more. Let's look at historical P ratio of JP Morgan stock. Mm-mm-mm. Bank stock, normally you want to be below 10. 14 can be quite expensive. You can see the bank stock right now, the reason why he's selling is actually because it's actually the highest it's ever got in the history of human mankind almost. Let's see, right now it's around what, 14? It used to get to the highest it's ever gotten is 12. What happened? Let's look. Where are we right now? It's around 12 right now. Yeah, this is a smart guy, around 13. This is a smart guy. We are at the highest already. The lowest that we want to get is around below 10, below 9, is around 8. Yeah. So he can feel it, he can sense it. But selling stocks by insiders is nothing to look at. People sell stocks all the time. Buying stocks by insiders is is a real deal. Okay. Is where, wow, it's actually gonna go up big time. And what stock are you personally looking at right now? I want to talk about one stock today called M&S. Marks expenses. Let's see, where are we? Yeah, Marks expenses. So, let's talk about the story of Marks expenses right now. I hope everyone knows what Marks expenses is. It's quite a global stock. It's like Tesco, but on a little bit on a high-end scale. So historically, Marks expenses have been here in 2000. It went up big time in 2007, and then financial crisis come to the bottom. One went up, right back down here. We are right now just right here, 2020, 25. It will be nice if you can do plot the really nice guidance graph for Marks expenses. I will tell you, for students in the one-to-one session, we will tell you when to buy this and why is this good in the one-to-one when we book it later on. But a word of advice is plot your graph really nicely for the guidance graph if you can, if you're able to. Very difficult to plot UK companies guidance graph, but if you can, try to plot it. And we book our one-to-one, we'll tell you why doing Marks expenses and when to buy it, when to sell it is really, really important. We have an earnings coming up for Marks expenses. Okay. One-to-one will tell you more about that later on. We talked about Marks expenses last year as well. Very similar time. Where are we? Yeah, we were here last year. It went up really nicely. One of the best performing stocks last year, 30% growth, just like that. Yeah. So we are around right now, just around here at the moment. So, you know, do some research about this. But in a one-to-one, we're gonna sit down, remind me in a one-to-one. Right when you talk about Mark expenses, can we talk about that? Yeah, if I do a one-to-one, just remind me to talk about that. Anyway, now let's go to your homework right now. To see are you what should we buy and sell right now? So, because of the situation that we are on right now, we will still be doing what we always do, which is, let me have a look. What am I typing? Find Google shit online. Google Excel shit. Let's look at your homework right now. Now, some people like, Oliver, should we buy stock right now? Should we sell stock right now? When we look at the homework, wow, that's the most important question. Because markets are so in the middle at the moment, we want to choose something that is huge. Oh, Google document, Google Excel sheet document. I don't even remember. How do I get access to your homework? Let me have a look. All right, I found it. Let's have a look right now for some of your homework right now. We want something that is big at this moment in time. All right. Just because of the market condition. Remember that when the market is very uncertain, we want something that is actually huge. Oh, I mean, it's the guidance. Oh, let's have a look right now to look at some of your beautiful homework. If you don't get this part of the training, I want to say well done. You're absolutely fine because you are early. Normally, this training is week 4 onwards. All right. So because you are too you want to do it early, hence we let you come early. So this part of the training is basically I compare figures. Okay, you will be doing some homework. We'll be giving very, very simple, very, very powerful, very, very powerful homework. Compare figures to see which is higher, which is lower, as simple as that. Okay, using some really, really powerful guidance strategy. But let's have a look. I'm going to start with that one. Now, if you want to buy, you want to be buying at the right PE ratio. Okay, done. Let's look at your. Okay, first of all, I want to say congratulations because whatever you did here is beautiful. Okay, I see the graph. I'm very happy. So let's look at it. I hope you are giving me guidance. The numbers is guidance. All right. Gross 22, 26, 28, 37, 26. Now, the only thing is I don't think this is guidance. That's the only problem. I don't think so. These figures is guidance because the figures is too precise. Yeah. I want something on the past tense. I want something to be on the guidance. But let me see. First quarter, um, rose 44, a nearly 40% beat. Analysts excluding rose 44 year on year, a nearly 40% beat on the tariffs. I just need to make sure this is the guidance or not. Let's look at the next one. I think it's just lagging. So let me see what are you doing. Reported, can you see you're giving me reported number? I want past tense. Reported is something's already in the past. 4.54. Let me see where's 4.54. Here. Came is a past tense. Outlook posted a profit in the first quarter compared with the profit. The outlook came as the company posted compared to the outlook came as the company posted a profit. So this is also a past tense, a lot of past tense going on here. So we don't use the past. I think the whole thing here is a past tense. Well done. The next time I want to see is a present tense. Okay, I will show you some example what present tense means. It just means that now expect. Yes, this is the present tense. You will have to use 91 minus 90. That's what you use. You don't use this. 5.4.54, this is a past tense. All right? You want to use a present tense. Very, very good. Well done, Thomas. I'm surprised you know how to do this. Let's have a look. This is 22, 20. Okay, this is beautiful. Let's have a look real quick. So the company is called MTech. So this is 31. This is 21. Slower than that. So supposed to go down a little bit. 22 is higher than 21. Go up a little bit. 22 is the same. So it should go very similar. 22 is very similar. 21 is lower than 22. It should go down. 21 is also lower than that. It's the same. Now we are here 21. And before was also 21. I love your try. Really good. But what about April 09? Where are these? This is Feb. This is December. We're just missing of that. Let's read this. Expect revenue 15 million compared to the original 21 million. So it's a drop of 15. I think you want to put a 15 here. So it's a sell. Absolutely. Let's sell this thing. MTech system. Sell because 21 million revenue dropped to 16 million revenue. Something like that. Let's have a look. Ooh, doo, doo. So even though the stock are going up big time at the moment, you can see if we use the strategies correctly, you should have shorted since when? 9th of April. That's when the news come out. Today is 15. You should have shorted since when the mines come out, when the news come out straight away. Even though the market was going up really nicely, stocks that are supposed to do bad will still come down really, really nicely. This is the power of doing guidance like the world has never seen before. Because 15 is quite big. It used to be, if you look at it carefully, it used to be what? 31, 21, 22, 22, 22, 22. Suddenly become 15, as you read here. So it's a big change like we never seen before. So you expect the stock to go down quite massively. So well done. Well done on finding this. Yeah, so a lot of students are already short on April 9. Cool. Let's look at the next one. What is this? 27th of March. I want something in the latest. I need the date as well. Okay, this is here. All right, I love it. First of all, I love your beautiful chart. Very nice drawing. Really, really nice. Really powerful. Remember, you want to do this because when you do it once, and the chart is with you forever. S&P 500, you do it, it's on your workshop forever. No one take it away from you. It's on your IG platform. Really nicely. Next time it comes out, you just have to add another one. Anyway, let's come back. I'm gonna let's see. So four, five. So five is bigger than four. It should go up. It did. And then 5.37, 5.5 is even higher than 5.37. It went up. 5.51 is the same. So the price should go sideways. Six is higher than five. It went up a little bit. It hit another six here. And then, oh, sorry. So this is six. This is six. Okay. And then this is six is lower than 6.16. 6.05 is lower than this. So it went down. No guidance issued to be released on 1st of May. Okay. When is 1st of May? Okay, a few weeks from now. Well done. Well done. Let us know when the guidance is released. You're doing well though. You're doing really well. And you know how to plot it in a nice way. And you are plotting the present tense. Let's look at this. This is guess. I think we done this the other day. Let's have a look one more time. Um, where are we? Um, let's start from here. Negative number. This is a bit tricky actually. You could look at this. Some people can't see it. That's fine. 1.71. Sometimes things are a lot of words there. We literally just skip it or we try to understand it. All right. So let's see what should we look at. Let's look at revenue. All right. So revenue used to be 8, 8, 9, and then the red one will be, which is the red one? Anyway, 8, 9, and it becomes 7. Obviously, it's lower than this. Should go down, supposed to go down. 7, 3, 9 is a little bit higher than that. Oh, this is quarter three, full year. Okay, let's look at full year. Sorry about this. The full year is at the bottom. Let's just look at the full year. Okay, I love that you include many things here. Very beautiful. Now let's look at the full year. Full year revenue, EPS is 2, and then the full year was increased 11 to even, and then ten is lower than 11, so it went down. And then 9 is lower than 10, it went down. And then 7 is lower than 9, it went down. Can you see revenue increase 7? 7, and then revenue to go up 3. 3 is lower than 7, it's supposed to go down as well. Guess. Let's have a look. Isn't this on our watch list though? Let's have a look. Um, yeah, guess it's on our watch list actually last week's as well. And well, we just right there. It's been doing okay, just sideways coming today. It came down 7% just like that. It's doing okay, taking its time. Still will go down, I think. Well done. Very, very, very good. Fine. It would be nice if the PE here, where's the PE? It would be nice if PE is super high. That's where you hit the jackpot. Now, what else am I on? Today is 10. Have I done this? ITT Corp to be released. Okay. All right. I think that's it for this person. Franklin Convey. You did it last week, isn't it? Very beautiful stuff. What is it? Revenue 275, 295. It's a bit down. 295, 295. It's not massive. Let me look at it carefully. It's a quarterly to quarter. Quarter is okay. Let's go at full year. 295, 275, 40 to 30. It's a little bit down. Franklin Conveyor. We done it last week as well, I think. Yeah, just slowly and gradually. The thing is, last week all the stocks went up, so this is going sideways. So you've been doing well as well. Last week, if the S&P 500 went up big time, which it did, S&P 500 went up at least 10% last week. Yeah, so this stock is not even going up. Most of the stock went up. This stock is not going up. So well done. Let's go to the next person. Doo, doo, doo. Let's look at beautiful Suki. We can remove the one on the top, Suki, because otherwise you're going to spend 5 hours scrolling down. But you're doing so well. Let's have a look on this beautiful stuff. April 3rd, April 2nd, April 3rd. We have done all of that already. April 1st. Well done, Suki. You are doing really well. We just need something recent. Today is 15, so we need 7 days ago. Well done. Next one, next one. Mm. Beautiful mark, March 10, April 5th. Maybe I can still look at. Ah, that's hard. Let me see. Who else have we got? Damimi 100% got it. Anyone who's done the homework and forget to look at it, This is your chance to remind me, or you might want to keep, you know, your peace a little bit. So remind me right now. That host and panelists, I will have a look on your trades. 15, beautiful. Let's have a look. Wow, these two. Damini, if you're watching, please give me at least five. I'm telling you right now. You're doing really well, but please give me at least five. Otherwise, we cannot back test it. We're not gonna know whether we're gonna make money or not. Let's have a look. So, decrease by 10, no outlook before. What are we supposed to do with this? I love that you got a P ratio here, but there's not a lot of info. Wow, you just put two. Wow, it's crazy. This is, please put at least five. Till let's have a look. 8 of 8. Decrease by 10%. This is 850, 950. No outlook given. Um, if there's no outlook given, we can't really compare though. You want to do something with the outlook given. Tilray brand, let's look. This week is a earning week. Wow. Students would have shorted it on the 8th of 4th. 8th of April will just be here. 9th of April, just right there. It will bounce out and then come back down like that. Decrease by 10%. How do you know? Okay. 850, 950. No outlook given before. Oh, that's why it's only two. Makes sense though. Okay. 17, 18, 18. Supposed to go up, but it didn't. Now 24. Because it didn't go up here. This September. Okay, this is when the market crashed a little bit on September last year. And then we are here, 24. Okay, this should be a buy. Lakeland Industry. Lakeland Industries. It went sideways like that. Interesting. This is why we need a little bit more. Do at least 5 to 8 quarters to the back so we can see how many times he didn't obey. So for example, this one he didn't obey here. It's supposed to be 18 and 5 is more than that. It's supposed to go up from here, but it didn't. So this is why back testing is so important. We need to have a lot of things at the back. Yeah. Well done. Let's go to the next one. Next one that we have right now is Sino. Love Sack. Okay, let's look. So we got we got one, we got zero. So it's a bad news. Compared to that, it went down. 0.8 is more than 0.27. It's supposed to go up big time, like the world has never seen before. Love Sack. Students who have already bought it on October 10th. Sorry, 10th of April. Love Sack. This is what I meant when I say things has never happened before. Then let's say you get 1 day late, just be here. This is a good buy. Well done for finding this. This is what we count as at least five. Dominic, I'm just speaking to you personally right now. Really nice. What am I gonna do right now? I'm gonna say buy because everything 200%. increase. This is what we talk about never happened before, not just 10%, not just 20%, but 200%. Wow, crazy, isn't it? You can see. These are when you draw so many, you get to see. Look, let me show you guys for those who are new. Look at it carefully. 1.83 is a rev is EPS. Just accept it. 1.29, 1.35 is more than okay, let's see. This is decrease. This is in the bottom. Now, November 22nd is the bottom of everything. So everything goes up. That's fine. And then 1.35, and then this is what? Decreased by 21%. 1.06, a bit weird. This is Q4. Okay, it's Q2 to full year. Basically, we want something that's full year, but it's okay. Q to Q4, we have to compare to Q4. Lovesec might be a very seasoned company. That means it's like they might have summer. What is Lovesec company? What is this? It's a furniture. What is this? Couch. Okay. It's the same as Costco and stuff like that. All right. And then we've got 1.01 Costco, Amazon. All of these can be very seasonal, you know. Their Q4 normally will be higher than the rest just because it's Christmas time. I think people want to change their couch and stuff like that. But anyway, so 1.0, 1.01 and then 1.006, 0.27 went down because it's lower than this. Now it's 0.8. It went up. Hmm. 0.8 is still not more than this one. We kind of need more data from there. But this is a very good find though. It's a good find. Increased by 200%. Wow. We just need a little bit more data. Just trying to compare last time when the EPS did that, what happened. We needed some revenue, you know. We need some more data rather than EPS because it's maybe a new company. Let's look at the next one. Um, Encino. We've got here. Where are we? 0.66, 0.75, 0.65, 0.66. Wow. Give me a second. This is Q4. This is Q4. Okay. Okay, let's look at this. It's very small, but we are trying our best here. 0.66, 0.75. 0.66. Okay, let's back test from the beginning. Yeah, just give me a second. Let's start from here. Let's just get one of the numbers. Let's compare revenue. Okay, 400 is the same. So the price is the same. 400, 403, very similar. 476 is more than 400. Stock should went up. It did went up. 474, 476, very similar. This is what 475, very similar. 476, very similar. So the stock goes sideways. 538. Which picture should I look next? It went up a little bit. And then here, 535, 535, 539, 574. Hmm. Not big enough though. What is this? Decreased by 12%. Encino. Not big enough. Yep. The revenue went up. If anything, it's gone up. You can see the revenue. From 539 to 4574. The revenue actually went up. Things went up. Cool, well done. Anything else? Let's have a look. Okay, let me look at chat box. Have a look at chat box for ages. Well done. Keep looking. A lot of people are doing really well. This week, there's a lot of companies going on. So that's what happened. So this is what we are saying right now. MTech, Lovesac company, and the rest from last year also makes sense as well. Yeah, the rest from last year makes sense as well. Where are we? Not last year, last week also makes sense. They're still moving slowly and gradually. Now, Raven, what are you waiting for? I'm still waiting for the crossover to happen. And if you got some money, let me know. Just text me so we can pump we can schedule, your one-to-one. We can put things into a real way and stuff like that. Yeah. Today the market is zero. A lot of red, a lot of zero. It's almost 9 o'clock now. Market is literally zero. It's very neutral at the moment. Still waiting for something to happen. But yeah, awesome. That's it for today. Now remember, um, as a great investor, it's like you have a swinging bat. Okay, the ball is coming 500 times on you. Let me do it like that. The ball is coming 500 times on you. Like keep coming from different direction. The balls just keep coming. You don't have to nail all the balls like that. You just have to nail one that you really like and you call it a day. That's it. That's what trading investors is all about. It's not about 500 balls. You're gonna throw that ball, and you know that ball, and you know that ball, you know that ball. It's not like that. It's about having one ball, and you call it a day from that ball. All right. So that's what happened. So I hope you learned something new. A lot of people who are new, you might not be able to get it. Don't worry. Just take a screenshot of this. Do in your practice account, do it on some of your account, and let's see what happened. All right. Do these two. It looks good, no? It looks nice. And hold it for 1 month, for a few weeks, and let's see how it goes. Okay, if you need help to build up something to take things up, book a one-to-one. Don't be shy. Just text me, Bertrand. What's happening? It's been a long time. Some students already expired already. Your 12 weeks. Never mind. Just come and text me. We take it from there. John Fisher, what's happening? You're gonna text me. So that's it for now. Hope you learned something new. We have Thomas, we have Theo, we have Suki, we have Stan, we have Sherry, we have Sarah, we have Sana, we have Sam. Sam, welcome home. Roxana, long time, long time. Roxana, where have you been waiting? Sam, we have Rohima, we have Rani, we have Paula, we have Pao, we have Nora, we have Mama, we have Melissa. Well done. We're going to book for one-to-one, Melissa. Next week, we're going to really talk about how to scale up big time. We have Laura, we have John, we have Javi, we have Hush. Welcome home, Hush. We haven't seen a long time. Hush know me for 5 years already. Crazy. We have Harry, we have Gary, we have Hafazan, we have Evelyn, we have Erwin, we have Asim, we have Digo, we have Shang, we have Kamila, we have Bibek, we have Bertrand, Palas, Amin, Aris. So many. Well done. That's it for today. I hope you learned something new, and we will speak to you very, very soon. Bertrand, you want to be fast, Bertrand. The market is doing incredible right now, Bertrand. You want to run, Bertrand. You want to run. You're doing so well. I'll speak to you guys soon. Stan saying hello, you're welcome. Mohammed saying thank you, Harsh, you're welcome. We have Shamin Sana with a session. How do you feel about we should set? How far do you feel we should set the stop loss? Very good question. I would say, I would say, um, you have to depends on your risk kind of tolerance. First thing, if you're using leverage, I talked about last week, you have to use very, very small amount. If we haven't done one-to-one, we haven't do anything yet, you want to use a very, very small amount. You want to set the stop loss in the way. Sometimes you have to look at volume. You have to put slightly below the volume. You have to put slightly above the volume. Let me just show you something. We normally show on the students at a higher level. Let me show you something. So you put a volume chart on. Um, like for example, you're using things like that to literally call it a a day, for example. Like for example, let's say you decide to like buy just right here. Okay, this is a volume peak chart. Okay, so when you decide to buy, pretend you can't see anything like that. You know, you can't see that. This is only for you are using leverage. If you're not using leverage, you're absolutely fine. You don't need a stop loss if you're not using leverage. Pretend you're using leverage right now. So you bought it just right there, and you know that the price that you bought is at the highest volume. So when you bought at the highest volume, you kind of want to put it at the low straight away, because next time the candle, can you see candle? It comes back in. Let me just show you the daily chart so you can see the hourly chart a little bit nicer. So let's say you decide to buy just right here. Sometimes you think that it's going to come down, remember? You think it's going to come down, you'll be like, oh, you're in panic, panic. But if you know that this is a very high volume chart, if you just put your stop loss just below the high volume chart, a high volume chart means a lot of buyers are there, a lot of pending orders are there. It's a very strong support line because a lot of people are putting pending orders just right at a high volume there. And people who miss out this one, the next time it comes back, it will go back again. So this is what happened. It reaches this really just nice this support, and it bounced back up really quickly. Yeah, but in the training later, I'm going to show you about it more in detail to show you some powerful stuff. It's going to blow your mind, Laura, once you get accepted into higher level training. So I'm just so excited for you right now, just trying to immerse, trying to learn as much as you can. But when you're ready, kind of later on, wow, your brain is going to open. So I'm so excited for you. You guys are doing so well, and I will see you very, very soon. Take care now. Send me a text. A lot of you are already expired. Well done. Send me a text and we take it from there. People keep asking me what is my background. It's just I'm literally just in my room right now. There's literally a TV. Where are we? So let me just show. People keep asking me, you should see yourself. For those who don't live in London, I don't even know how do I see. How do I see? So you can see the pink color stuff just right there. So people keep asking me all the time. Wait, whoops. It's hard. It's hard. It's like a mirror. It's very difficult. It's very difficult. Yeah, there's basically a London Eye just right there. You can see a Big Bang just right there. You probably can see the shark just right there as well. Yeah, life wasn't always like that. Where's the shark? Um, where's the shark? Oops, let me just show you just right there. Where's the shark? Probably just one of these buildings. The shark one. Is it out? Yeah, that thing. It's crazy, isn't it? But life wasn't always like that. There was time in my life you already know we really struggling, and stuff like that. But life wasn't always like that. But the good news is because people master trading and investing. Look at the top 100 richest person in the world. Jeff Bezos, Elon Musk, Mark Zuckerberg, Warren Buffett. Anyone that you look at in the Forbes magazine, they are all doing stock trading. So you are in the right place. I'm so excited for you. Decide to learn such a powerful skill. This is it. Get to the next level, book a call, and we can see what we can do. Speak to you very soon. Take care now.